Hello everyone, welcome back to Small Talk. Oh my gosh, what just happened today in the stock market? I'm pretty sure by now you've already figured this out, but I wanted to share my perspective with you. Bear with me today because I did write down some of the dates and some of the numbers. I have tendencies to forget things. So excuse me if you see me looking down just to glance at some of the figures that I wrote down and some of the brief notes that I took while Jerome Powell was talking. So as usual, it was a good day in the market. Everything was doing fine. Tesla was up another $20 this morning, went all the way up to $488. And then suddenly it's time for FOMC meeting and Jerome Powell shows up and he opens his mouth and dang, everything just collapses. Sometimes it makes me wonder how powerful these people and their words are. Like literally every single word that comes out of their mouth, sometimes it changes the entire construct of entire stock market. It changes the entire economy. That's how powerful the Fed is, basically, and ultimately Jerome Powell is. So what happened today? I guess this was not the meeting that we were expecting. And when I say we were expecting, means the Wall Street was expecting. Of course, everybody was expecting a hawkish Fed, which means 25 basis points rate cut was expected, and then fewer rate cuts next year. Two, possibly three rate cuts were expected. I was personally of the opinion that Jerome Powell will do 25 basis rate points in December, and then next year, instead of doing four rate cuts, he'll probably do only three rate cuts. But to me, it was a little bit shocked that he said he's only probably going to do two rate cuts next year. And when he was asked that why did he decide to do two rate cuts, and his answer was, and then they asked the question, why then even do the rate cut this year if he's only deciding to do it two rate cuts next year? This is what he responded. He said that we're not cutting because inflation. He said the next year we're planning on not cutting the rate because inflation is too high. Well, then that raised the question, of course, that why did you cut the rate to begin with? And it was a very confusing meeting in terms of the labor market. Is it too hot? Is it too cold? And I guess Fed doesn't know the answer, and we don't know the answer. It seems like there's a disconnect between the data that they receive and the Fed's understanding of the labor market, and that's probably what stock market is digesting right now. Right when he said that they're not sure about the labor market, we don't know if it's hot or cold. For the last two CPI release, it's been warmer than expected. So that right then the stock market starting collapsing. And I was just looking at it going down, and it's like everything is selling. NASDAQ went down 3.5%. Tesla went down a little over 7%. Like every little stock in my portfolio was red. And then every NASDAQ, S&P 500 went below $6,000. NASDAQ, of course, as I said, crashed. So everything started going red. And I guess market has to understand, well, the problem is market was already overhyped anyway since the election. It was only counting in all the goods that's going to come once Trump takes the oath and gets into the office. But nobody was expecting anything other than, and nobody was looking at the rest of the information that was coming out. For example, the labor market, the CPI release, and all that stuff, the job reports. Even though they were coming warmer, people were just ignoring it, thinking that everything is going to be fine. I am still of the opinion that the deregulations, as soon as come January, when Trump gets into the office and he takes the oath, I think things are going to be fine. But the stock market is very dumb and blindfolded, can't see past certain time frame. It's looking at the short term. Sometimes it does look at the 12 months ahead and ahead also. But because market was already, I shouldn't say in a bubble, but it was like very overbought. So this correction or this pullback was imminent after the Fed's meeting today. So again, I understand why market was collapsed, because market doesn't understand whether Feds understand what's going on with the labor market. Does that make sense? And until market figures out like what's going to happen, I think it's going to keep pulling back. But it has already picked back up. And I saw that Tesla went down another $10 after hours, but then they went back up $5. So I guess people who were waiting on the sideline, who thought that they missed out, they're buying in. Nvidia was doing very well during the daytime, then they went down to $128, and everybody bought the dip after hours. So Uber was down $59 yesterday, but today Uber was doing great, but then they pulled back a little bit, and those people who were waiting on the sideline, they bought the shares after hours and they went back up again. So it seems like everybody who thought that they missed out on this trend, the second market went down or crashed, people just started buying in. And not to mention the other $5, 6, 7 trillion that's sitting on the sideline into the money market, that hasn't inflowed into the money market yet. I mean, into the stock market yet. So come January, I think once this the hype for this meeting settled down a little bit, I think people are going to start buying in. Even though there was a little bit of pullback today, it was a significant amount that was pulled back, but the stocks are still in overbought category because the market had gone up so much in this past couple of months since the election, that even with the 10, 12% or 15% pullback, it's still overbought. It's still in that so-called bubble. I don't call it bubble, but it's like, like a mini bubble, sort of like a short-term bubble. So I think stock market is going to fluctuate, like keep fluctuating in the short term, but I think in the long term we are safe. I think Tesla is going to be bought back in because there are lots of people who wanted to get into Tesla and they thought that they have missed the boat. And now with this 10, 15% pullback, they're just going to go in and buy the dip. Let's see what happens tomorrow. My opinion that it's probably going to go up a little bit in the morning, and then it's going to be a very frothy day. Like it'll be fluctuating throughout the day depending on what stock you're looking at and what funds that you're looking at. So, but I think long run, everything is going to be okay, because once the Trump takes the oath and he gets into the office, and he signs that executive order day one on deregulation, I think that is going to take the stock market to next level. That's very pro-growth. That means that this president is all about progressing in technology, growing technology, and that's what's going to help the market. So today, everything pulled back, including cryptocurrency, particularly Bitcoin. It went almost under $100,000 today. Last time when I checked, I don't know if it ever did go below 100 or not. But it's like everybody just freaked out. Everybody was trying to figure out what Fed just said, and nobody knew what to expect from the market. And I think it took them a couple of hours to process everything, and then everybody started buying back in to those high-tech stocks. For example, Nvidia, Uber, Tesla. I didn't check Bitcoin. I'm not sure if that went up or down. I haven't had a chance to do that. So that's that. So again, this could be the flush for short term. And then again, the other thing that bothers is like if the interest rates don't go down, interest rates are like still 6, 7%. That means housing market is not going to pick up. And housing market has a big impact on the economy, on the stock market, on the financial institutions as a whole. So this whole thing could cause a long-term pain if the rates don't go down. I feel like I'm not sure if Fed would even do 2 rate cuts next year. I think that's the uncertainty that stock market is worried about. But I feel like, again, they're data dependent. So depending on how the next CPI report comes, how the labor report will show how many job report, what the job report will show, that how many jobs were created, whether it's, if jobless claims are higher or lower. All those things are going to determine the future of the stock market. The other thing that I was looking at and that bothered me a lot was that yield curve is flattening too. That's not a very good sign. That's something that I wasn't expecting. So I'm a little 50-50 on the market. I think short term we're going to see some pain in the market. Once Trump gets into the office, things might change a little bit. So for the next couple of weeks, or 2 or 3 weeks, I think market is going to be very going to be fluctuating uh, up and down. Take some profits if you need to, or you can just ride the wave, go through the tough times, and hope for the best in the near future. So I'm going to summarize this. Why it crashed? Because market was uncertain, since they felt like Fed was uncertain what's going to happen with the inflation. They don't know if the inflation is going up or down next year, and they're just cutting rates because they don't want to go too easy or too tight, so they just want to stay in the middle just to balance that off. Instead of doing 4 rate cuts next year, they're going to do 2 rate cuts next year. In December, they decide to do 0.25%, and then next month everything is going to be data dependent. But then the market was expecting a little bit more certainty from the Fed chair, Jerome Powell, which he seemed to be a little confused and he didn't know how to answer some of the questions. And I guess I don't blame him. It's probably because the data has been coming so confusing. It's been if you look at the CPI report for the past 4 or 6 months, I think it was going down constantly, and then for the last 2 months, the CPI report was warmer than expected. So he's even a little bit confused because he doesn't know what the next month is going to show him. So I guess we have to sit back and see how the data comes next month, how the job report comes, or the CPI report, what CPI report shows, and then I guess based off of that we can make our choices and decisions. I was hoping the Tesla will go to 500 today or by this week, and then I can sell, because I was absolutely definitely planning on selling my Tesla stock at $500. But I think with this CPI, with this FOMC meeting, I don't think that's going to happen anytime soon. It might still go to like maybe 465, 480-ish level. Sorry, 465, 468 level. I don't think it's going to hit 500. Next year, there's a possibility that it might hit. So I'll check. I'll see which direction the stock go for next couple of days. I'll monitor it very closely, and then I'll make my decisions based off of that. Bitcoin, as I said, if it crashes and goes down to $280,000, I would probably initiate a position in Bitcoin, and I'll just buy some at that point. If it doesn't get to that level, then maybe it's not meant to be for me. I'll just wait for it to go down, because I just don't want to FOMO in and chase the stocks. I have done that back in 2021 or 2020 rather, when everybody was like a stock market genius, because it was a bull market and every single stock that you purchased, it was going up, and I was literally making on my $20,000 investment, I was making $100,000 every month. That's how crazy the market was. And I bought every penny stock, every tech stock. I bought every EV stock, like you name it. But I was very new to investing, and I was stupid. I didn't realize the market just don't keep going up. It comes down as well. Particularly if you're invested into penny stocks, they're very volatile and they're high risk, high reward. So yes, sometimes you're making on a $10,000 purchase, I was making $25,000, $35,000, like literally in 2 or 3 hours. And I was stupid enough that on the $10,000 investment, there were some stocks that I had made $100,000, and I still didn't sell. I was like, no, it's too soon. Like if I have 1,000% gain on it, it'll be. It was so greedy and stupid of me not to sell them at those levels. But then, as soon as Fed started increasing the rates, the market collapsed. And when market would collapse, those penny stocks, they collapse big. It's like you're losing all your gains within a fraction of a minute. And that's what happened to me. So I had lost so much money at that time. So therefore I've learned my lesson from my previous mistakes. When something has gone up so much, I usually don't FOMO in. I always say, if I miss this trade, there's going to be something else for me. There are so many companies that I can buy in. There's going to be so many buying opportunities. And as I said, everything that goes down has to come back. So even though I feel like Bitcoin probably will never go below 100,000, but you never know. Anything could happen, and it could go below $100,000, and that would be my opportunity to get into Bitcoin. But right now, I don't think I'm going to chase it and get into this crypto market, because then I just don't want to lose my money again. You have to have very tough stomach to digest the losses that I have digested. It was painful, I have to say. Now that I've been seeing it for so many years, I think I'm just used to it. But I just don't want to take any more losses at this point. Please let me know your thoughts in the comment section below. Please give my video a thumbs up. Please let me know what you expect from the market going forward towards the end of the year and into the next year. Please subscribe to my channel and give my video a thumbs up. And I hope that you guys all do well. Good luck to you. Until next video, take care.